Hello. Good evening, everyone. Can all of you hear me? Sanobar, Prabha, can both of you hear me clearly? Hello. Can both of you hear me? Sanobar and Prabha? Okay, great. Sanobar, can you hear me? Prabha, can you hear me? Uh, okay. So good evening and welcome to the class, everyone. Thank you for attending my class today, Sanobar and Prabha. I hope others will join us soon. Right. So the topic that we will be discussing today will be about the rules for credit and debit, right? How to fill the journal entries, compound journal entries, right? We will do all those stuff today, right? And we will also see some examples as well. Okay. I hope all of you can hear me clearly. My voice is coming clear to all of you. Yes, Prabha, I had asked the coordinator today and she has mailed me that she was telling me that till 9th of April it was uploaded and after 9th of April she have to upload, right, which she will do it soon. I will show you her mail what she has written to me. One second. I think she has done it today. She has mentioned in the mail that she will upload it today. This is the mail she has written to me today. Files shared on webclass are uploaded till 9th of April. Rest it will be done today, right? So it might be possible that she has already uploaded, right? So you can check it, and if she has not uploaded, she will upload it by tomorrow, I think. Divya, can you hear me? Divya and Sanobar, can both of you hear me? Divya and Sanobar, can you hear me? I'm not getting the response from Divya, Sanobar. Okay, Dijesh has joined us. Dijesh, can you hear me? Okay, great. How are you? Good evening. Welcome to IMTS. Welcome to the class. Dijesh. Kelvin has also joined us. Kelvin, good evening. Can you hear me? How are you? I'm doing good. Thank you for asking. Hope you have a great day today. I hope you can hear me clearly. Divya and Sanovar, what happened to both of you? No response in the chat box. Divya, Manoj, and Sanovar, Shakur. I don't know what happened to. Okay, you should respond, Sanovar, right, in the chat box. Divya, what about you? Could not heard you before. When other students are typing in the chat box, it means that I am speaking, right? So you should also respond respond to me. Anyways, no issues. Divya, what about you? Can you hear me? I also typed in the chat box Sanover that whether you can hear me or not. If you are not able to hear me, then you should have seen my chat. Anyways, no issues, not a big issue. It's okay. Okay. So let's start the class today. So today we will be discussing about journal entries. Right. So can all of you see the word file I've uploaded on the whiteboard? Can all of you see with the heading journal entries? Okay. One second. So today first we will learn the rules for credit and debit. Right. I hope you have seen a lot of examples where it was mentioned the things which can be credited, the things which can be debited either in the balance sheet, right, or other sort uh, of forms. I hope all of you are familiar with journals. I have shown you a few examples of it, how it looks like, right. So anyways, we will quickly go through it again and we will see some of the principles of of its process. I hope all of you have seen a journal like this in the past, where there is one debit which is always written on the left, there is a credit which is always written on the right, right, and debit should always be equal to credit. Right now, the challenge which comes is to analyze from the given question or from the given scenario or situation which thing to be put in debit, which things to be put in credit. That that all depends on your accounting knowledge. Like here the for the here the cash is uh, put in the debit section and the common stock is put in the credit section. I hope all of you understand the meaning of the term credit and debit. Debit means deducted, credit means submitted or added, right? Debit means deducted and credit means added to the account, either to an individual account or to organizational account. Clear everyone? Any doubts so far? I have no sound. I have a sound problem. Prabha, please re-log in. Others can hear me. Okay. So let's quickly see what is the journal entry quickly. Journal entries are the first step in the accounting cycle and are used to record all business transactions and events in the accounting system. As business events occur throughout the accounting period, journal entries are recorded in the general journal to show how the event changed in the accounting equation. Accounting equation, all of you are familiar with, right? Assets plus assets is equal to liability plus stockholders equity. For example, when the company spends cash to purchase a new vehicle, the cash account is decreased or credited and the vehicle account is increased or debited. Identity transactions. There are generally three steps to making a journal entry. First, the business transaction has to be identified. Obviously, if you don't know a transaction occurred, you can't record one. Using our vehicle example above, you must identify what transaction took place. In this case, the company purchased the vehicle. This means a new asset must be added to the accounting equation, right? So we will add one asset because that new vehicle is the asset of the organization. Analyzing the transaction. After an event is identified to have an economic impact on the accounting equation, the business event must be analyzed to see how the transaction changed the accounting equation. When the company purchased the vehicle, it spent cash and received a vehicle. Both of these accounts are assets accounts, so the overall accounting equation did not change. Total assets increased and decreased by the same amount, but an economic transaction still took place because the cash was essentially transferred into a vehicle. This is how we will analyze the transaction or the event that has occurred where the cash of the organization is involved. Next is journalizing the transactions. It means that writing the transactions in the journals. After the business event is identified and analyzed, it can be recorded. Journal entries use debits and credits to record the changes of the accounting equation in the general journal. Traditional journal entry format dictates that debited accounts are listed before credited accounts. Each journal entry is also accompanied by the transaction date, title and description of the event. Here is an example of how the vehicle purchased would be recorded. Let's see this example. Since there are so many different types of business transactions, accountants usually categorize them and record them in separate journals to help keep track of business events. For instance, cash was used to purchase this vehicle, so this transaction would most likely be recorded in the cash disbursement journal. Right? There are numerous other journals like the sales journal, purchase journal, accounts receivable journal. Right? So there are so many types of journals. For example, we are following fall around. Let's see this new example. We are following fall around for the first year as he starts his guitar store called Paul's Guitar Shop Incorporation. Here are the events that took place. Now let's see how to make the journal entry of this example of Paul Guitar Store. Journal entry 1. Paul forms the corporation by purchasing 10,000 shares of $1 per stock. $1 per stock. How to mention it? Suppose he bought it on January 1st. So cash will be 10,000 and common stock will be also be 10,000. To record stock issuance, right? Next. Journal entry 2. Paul finds a nice retail store front in the local mall and signs a lease for a $500 a month. For $1.05, right? So he found one shop which he is planning to open in a mall for which he has to pay $500 per month. Right? So for this, no journal entry is required. We will leave it blank. Suppose he signed the lease on 15 January. So this thing should not be mentioned in the journal. Are all of you following me or not? Everyone? Is there any confusion, any doubts? Clear or not? Kelvin and Dijesh is clear. Sanobar clear? Divya clear? Okay. Next scenario. Journal entry 3. PGS takes out a bank loan to renovate the new store location for $100,000 and agrees to pay $1,000 a month. He spends all of the money on improving and updating the store's fixtures and looks. How does this scenario will be mentioned? So suppose this scenario happens on 1st of February. So we will mention leasehold improvement in debit and long-term liability on credit of $100,000. Next scenario, to record new loan and improvements made on storefront. This is for mentioning the loans. Journal entry 4. Suppose PGS purchased $50,000 worth of inventory to sell to customers on account with its vendors. He agrees to pay $1,000 a month. Prabha, can you hear me now? Okay. We are just discussing few examples of how to write a journal. How many of you have written a journal in the past? Is there anyone who have written a journal? I hope some of you are accountants or are from the accounting background. Is there anyone? No one. Okay. PGS purchased. Okay, so this was done. Let's see the entry 5. PGS first rent payment is due. So it will go in rent expense 500 debit and in cash of the organization 500 credit. This journal entry is for recording the rent payment. I'm still written. Where are you writing, Kelvin? On which point are you? Fourth point, third point? Where are you? Let me know. Have you written the fourth point? Third point? Okay, let's discuss the fifth point. Fifth point we have already discussed. Rent expense which will go in debit and cash will go in credit. Right. Let's see the sixth journal entry. Suppose PGS has a grand opening and makes its first sale. Right. Suppose it sells its guitar for $500 that cost them rupees $100. Right. So they have made a profit of around $400. Right. Now how to mention it in journal? Here the cash will go in debit section, which is 500, and the cost of goods sold will be again 500 plus the inventory which will go in $100. So now always see to it that the sum of the debit should always be equal to the sum of the credit. Now here if you add 500 plus 100 it will be 600, and credit is also 500 plus 100 which is 600. So right, so this is how we will write. Right, so the main objective behind this is to make you understand how to fill the journal entries. Right. Next, this is for recording the sale of inventory. Let's see one more journal entry example. Now suppose PGS sells another guitar to a customer on account for $300, right? And the cost of that guitar was $100. So they made a profit of how much? $200. So here we will mention the accounts receivable as $300 and the cost of goods sold as $100, and the revenue and inventory we will put it as 300 and $100. Third, this is for recording the sale of inventory on account. Let's see the eighth journal. So suppose this organization PGS have to pay its electricity bill for a sum of $200. How to fill the entry in journal? Let's see. It will go in the utility. Suppose the due date is 15th of April, right? So it will in the account name it will go in the utility expense. $200 debited. Debited means the organization have to pay this $200 from the organization's account to the electricity company, right? So that I say debited, and cash will be credited in $200 to record payment of March utility bill. Clear, everyone? Clear, everyone? Sanobar, Divya, Dijesh, Kelvin, Prabha. Okay. I had a sound problem. Others can hear me clearly, Prabha. I don't know what's happening with you. Okay. Okay. Let's see the 10th journal entry. I'm still writing. Okay. At which point are you, Kelvin? At, at which entry you are? At journal entry 10, 9. Where are you? 10th one or 9th one? This one or this one? Okay. Let me know once you are done writing. Then I will proceed. Now, in real scenario, what will happen? A question will be given to you all the activities along with dates, and you will be asked to make a journal entry. Right? The question will be given to you. You have to fill the dates, the account name, the debit, and the credit. It's all up to you. Right? So then you have to choose. You have to choose the account name, the correct account name, which will go in debit, the correct account name, which will go in credit, right? So it's totally up to you. Let's see the 10th journal entry. Suppose Paul is getting so busy that he decides to hire an employee for a $500 a week. Pay makes his uh, Paul makes his first payroll payment, right? So it will go in wages expense, 500 debited, and cash 500 credited. This is for recording payroll expense. Next one, vendor payment. PGS first vendor inventory payment is due of $1,000, right? So this is yes, but I'm discussing all possible sorts of accounts. Okay, so that if any situation arises, then all of you should be prepared. So record right now. This is for recording the payment to vendors. So accounts payable will go in debit, and cash will go in credit. Next one, 12th journal entry. Paul starts giving guitar lessons and receives $2,000 in lesson income. Right. So this will go in cash as 2,000 debited, and lesson income will go in 2,000 credit. PG's first bank loan payment is due. Long-term liabilities will go in 500, interest expense will go in 500, and cash will go in 1000. So 500 to 500 will make it 1000 and 1000. This is for recording bank loan payment and interest expense. Last entry. Journal entry 14. Suppose PGS has more cash sales of 25,000 with a cost of goods of $10,000. Right now, how to make an entry in journal? Suppose this transaction happened on 30th of November. So here the cash sales was 25,000. So in cash, in debit, it will go 25,000, and the cost of goods sold is 10,000. Similarly, the revenues and the inventory will be 25,000 and 10,000 for the organization, which makes a sum of 25 plus 10 is 35,000 for debit, and similarly 25,000 plus 10,000 is 35,000 for credit. So both are balanced. This is for recording additional merchandise sales. Entry number 15. In lieu of paying himself, Paul decides to declare a $1,000 dividend for the year. Right? So 1,000 debited and cash of 1,000 credited. To record dividend paid in December. Okay, Prabha, fine. Now that these transactions are recorded in their journals, they must be posted to the T accounts or ledger accounts in the next step of the accounting cycle. We will not discuss this accounting cycle. It's very important. So till now clear? These are just few examples of how to fill a journal, so that all of you have the idea of what exactly it is. Clear? Any doubts? Samabad, Divya, Vijay, Kelvin? Vijesh, following? Kelvin, following? Okay. Now let's discuss the accounting cycle. Can all of you see on the whiteboard the accounting cycle? Prabha, can you hear me now? Loading. Is it loading for everyone, or can all of you see? Prabha can see. Kelvin, can you see? Vijesh, Manobar, can you see? Vijesh can't see. Kelvin can see. Manobar can see. Vijesh, what happened to your whiteboard? Others can see. Still loading. Okay, 1 second. Let me change the page. Can you see now? No. Relog in again. It might work then. Okay. Relog in quickly. Okay, let's wait for him to relog in and then we will continue. Okay, he has joined us again. Rajesh, can you see now? Okay, good. So this is the accounting cycle, right, which every organization or every accountant follows. Step one is analyzing the transaction. What kind of a transaction is it? It is right. Once we analyze the transaction, and then we will use that particular journal for filling that transaction, whether it is a sales journal, right, or other sorts of journal. Step two, journalize the data about transactions, then filling the journal. Step three, post the data about transactions. Step four, prepare a worksheet. Step five, prepare financial statements. Step six, record adjusting entries. Step seven, record closing entries. Step eight, prepare a post-closing trial balance. And step nine, interpret the financial information. So these are the 9 steps which all of us have to follow. Well, let's see. Objective 1, record transactions in the general journal. What is a journal? A journal is a diary of business activities. There are different types of journals, as I explained to you. Transactions are entered in the journal in chronological order. You can see this example, right? This is the date section, this is the description, this is the debit. Debit is always written on the left, credit is always written on the right. Now they have explained this cash. Enter the account to be debited. First for debit credit period, and then enter the amount on the same line in the debit column. So if this cash 90,000 is debited, enter the account to be credited. Now then comes for credit. Suppose Jason Taylor capital. This is the capital of this individual Jason Taylor. That will go in the credit section. Enter the amount on the same line in the credit column. This is how we fill a general journal. Clear? This is the date 6th November 2010. This activity was happened on 6th of November 2010. Clear, everyone? Yes or no? No one is responding. What is yes? Okay. Nijesh following? Over Kelvin. Okay. Next step. Next step is to enter the concise description of the transaction, so that even a person who is not aware of this transaction can understand what exactly happened in this transaction. Right? So then you will write this note: investment by the owner, memo 01. Then enter a complete but concise description of the transaction. Wherever possible, whenever possible, the journal entry should refer to the source of the information. This is the document number. Document numbers are part of the audit trail. Right? Some memo was generated, so whose number is memo 01. Clear? Now let's see how to record a business transaction. Step 1, analyzing the financial event. Identify the accounts affected. Classify the accounts affected. Determine the amount of increase or decrease for each account affected. Next step, apply the rules of debit and credit. The rules that I have discussed a short while ago. Right? It should be filled. Which account is debited for what amount? Which account is credited for what amount? Right? The next step is to make the entry in T account form. Fourth step, record the complete entry in general journal form. Let's see one more example of cash investment by the owner. Now suppose on 6th of November, Jason Taylor withdraws $90,000 from personal savings and deposits it in a new business checking account for JT's consulting services. So how to write a journal for this? It's like this. 90,000 is debited, so it will go in cash, and it's investment by the owner. So Jason Taylor capital, the 90,000 investment by the owner. Clear? Let's see how to fill the journal for cash purchase of an equipment. Suppose if any organization purchases any equipment, which will later on become the assets of the organization. So suppose say on 7th of November, JT's Consulting Services issued a check, right? This is the check number 1001 for $10,000 to purchase a computer and other equipment. How to show this in journal? Equipment 10,000 will be debited from the organization's account, and cash will go in 10,000 credit, right? And here are the details: purchase equipment along with the check number, which is 1001. Clear? Okay. Now suppose on 10th of November, JT's Consulting Services purchased office equipment on account for $10,000. Right now, how to show it in journal? Equipment purchase of 12,000 and accounts payable for credit will go in credit. And here are the details: purchase equipment on account from office plus. This is the check number 2223 due in 60 days. It means that the company has to pay this 12,000 within 60 days. It is still not paid, right? That's why they are showing accounts payable over here. It means the amount which has to be paid from the accounts, which is still due. Let's see the journal for cash purchase of suppliers. Now suppose on 28th of November, JT's Consulting Services purchased supplies for $3,000. Right? This is the check number 1002. How to show it in journal? Date will be mentioned in date section. In the description, supplies will go in debit of $3,000 and cash will go in credit for $3,000. And here the description of the transaction will be written: purchase supplies with the check number 1002. Payment to a creditor. Suppose on 30th of November, JT's Consulting Services paid office plus $5,000 in partial payment of invoice. This is the invoice number 2223 as well as the check number 1003. How to write this in journal? Account payable will go in 5,000 and cash will go in 5,000. Paid on account office plus with the invoice this and check number this. So it's easy. Alright, so the only objective for an accountant is to judge whether the entry will be inserted in which section, right? And then it will be just the calculation work. Recording the prepaid rent. Suppose on 30th of November, JT's Consulting Services wrote a check with the check number 1004 for $7,000 to prepay the rent for December and January. Right? How to write it in journal? Prepaid rent 7,000 will be debited from the organization account and cash will be going credit. This is the details. Clear? Everyone? Kelvin following? Prabha, Dijesh, Divya, Sanobar. Okay. Right. So I am discussing all possible journals, right? So that when you face the real questions, you feel comfortable of what to write in description, right? And then filling the amount is a easy thing, right? Whatever possible scenarios that can happen in day-to-day transaction activities in an organization. Okay, just read this. Just give me a second to drink a glass of water. Yes, this is all manual accounting procedures, right? But nowadays, softwares are there or the templates are ready-made templates are available where the organizations just have to fill the values, accountants have to just fill the values, right? Read this. I'm just coming in a minute. Yes, there are so many Prabha, right? SAP is a very renowned one. Tally is also there. PHP is also there, right? Anyways, now suppose JT is Consulting perform the services for $26,000 in cash. Now how to show it in journal? In description, cash will go for in cash. In debit we will write cash $26,000, and then debit, sorry, in debit we will write cash, and in credit we will write the piece income performed services for cash, which is the description of the transaction happened. Performed services on account. JT's Consulting performed services on account for $9,000, right? So account receivable will be 9,000, piece income will be 9,000. Performed services on credit, right? Right, so you can read all these. It's a long 40-page document with all the possible scenarios which can happen in accounting, right? You can read them, right? Once it gets uploaded in the LMS. Let me. Now let's debit credit rules. Let's also discuss this. So I'm interested. Interested in what? Kelvin. Interested in party, singing, dancing, what? You are interested in singing, I will unmute you. See, if I keep on discussing that, if I keep on discussing this document, it will get a bit boring. Right? It's a 40-page. In the free time, you can go through it. It's long. You can see, right? It will be uploaded in the LMS. You can go through it in detail. Right? It's a 40-page document. The class will get boring, right? If I keep on discussing that. And there are so many examples. Uh, let's read this. Debit credit rules. It's interesting and important. In financial accounting, debit and credit are simply the left and right side of a T account respectively. They are used to indicate the increase or decrease in certain accounts. When there is a change in an account, that change is indicated by either debiting or crediting that account according to the following rules. Assets and expenses. An increase is recorded as, suppose if the assets and expenses increase. So what will happen? An increase is recorded as debit on the left side, or a decrease is recorded as credit. Right? For assets and expenses, always remember. For liabilities, equities and revenues, a decrease is always recorded as debit on the left side, and increase is always recorded as credit on the right side. For contra accounts behave exactly in opposite way to the respective normal account. For example, suppose the owner brings cash for his personal account into the business. Let's see the analysis. What will happen? Cash, that is an asset, is increased, thus debit will debit the cash. Owner capital, which means an equity, is increased, thus credit the owner's capital. Office supplies are purchased on account. What will happen? Analysis. Office supplies, which is an asset, is increased, thus debit the office supplies. And account payable is a liability, is increased, thus credit the account payable. For wages payable is a liability, is increased, thus debit wages payable. And cash, which is an asset, is decreased, thus credit the cash. Revenue is earned but not yet received. Let's see the analysis. Accounts receivable is an asset, is increased, thus we will debit the account receivable and credit the revenue. Right, these are some of the rules which we can find from this site. Very important rules for you to remember. Yeah, we can get these rules. Let's see one last example. Then we will wind up the class. For compound journal entries. Can you see, all of you? This is a compound journal entry. Can all of you see on the whiteboard? Okay. So a compound journal entry is an accounting entry which affects more than two account heads. A simple journal entry has one debit and one credit, whereas a compound journal entries include one or more debits and or credits than a simple journal entry. A compound journal entry may combine two or more debits and a credit, or a debit and two or more credits, or two or more of both debit and credits. Right, so it has more than one value. But the thing to be keep in mind is that the sum of the debit should always be equal to the sum of the credit. The compound entry is simply a combination of two or more simple journal entries, but instead of recording numerous simple journal entries, it is better to record journal entries of single accounting event as a compound entry because it saves time and keeps related debits and credits in one place. Let's see one example. Now you can see here there are more than one debit and one credit. Credit value is 34,000 and the sum of debit value is also 3400 of 1000. Right. Now suppose on 1st of January 2013, company T purchased a computer which is costing $1,000 to a supplier and issued a check of $3,400. The excess amount fully settles the previous amount owned by the company to the supplier. This will be recorded in the gen. Right now they have purchased a computer for $1,000 and suppose if this company T uh, have to pay $2,400 which was remaining from in the past. How to show it in journal? They purchased for $1,000, account payable of some previous dealing for 2,400, right? So both these things will come in debit and the cash will go in credit, 3,400. Clear everyone? Yes or no? There's a difference between a journal entry and a compound journal entry. And I'm just trying to show you the difference. So Noble, Divya, Kelvin, Prabha, Dijesh, is it clear or not? Prabha, clear or not? Not clear. Okay. Good. Dijesh, what about you? Kelvin? Dijesh and Kelvin, have you followed? Dijesh and Kelvin. Dijesh says yes. Kelvin, what about you? Prabha, did you understand the difference between a simple journal entry and a compound journal entry or not? First tell me this. No. Okay. Now see, let me show you. All these things which we have discussed, this yellow journal entry, journal. This is a general journal. Why? Because it has only one debit value and all the examples you see. One debit value, one credit value. One debit, one credit. Let's see what happens in compound. In compound we have two debit values, one purchases and one account payable and one credit value. More than one, yes. Also see in next example we have again two debit values. We can also have two credit values and one debit values, or we can have two debit values and two credit values. That's what it's saying over here. Read this line. A compound entry is simply a combination of two or more simple journal entries. But instead of recording numerous simple journal entries, it is better to record journal entries of single accounting event. No, read here. Read this line. A, com- a compound journal entry may combine two or more debits and a credit, or a debit and two or more credits, or two or more of both the debit and credit values. Right. Now, in this example, what is happening? This company T, right? They have purchased the computers for their offices for $1,000, right? So they have given the orders to some suppliers who will supply the computers to that company T. Now they have done some previous dealings or some business for which Uh, the company TT was due to pay $2,400 to this supplier, right? Which they have decided to pay now, along with the payment of this $1,000 for this computers, right? So purchases of what? Purchasing of computers for $1,000 debited. It means $1,000 the organization is paying from their account to the supplier. So it means they are taking the money out from the organization's account and submit and depositing it in supplier's account. That is why we have debited 1,000. Take out debited means. Clear or not? Subha, yes or no? Okay. Similarly, they also have to make the payment of this $2,400, which was due from long time. So the organization decided to pay it now along with this payment. So again, $2,400 the company have to pay from the company's account to the supplier's account. So again, 2,400 is debited, right? And the cash which is credited is 3,400, right? So the sum of debit will be 1,000 plus 2,400 is 3,400, which is equal to the credit amount. Their sum has to be equal. Clear? Example one, Prabha. Let's move to the last example. Yes, Kelvin. Tell me. Kelvin, yes, tell me. Now let's take a look at example number two. FGH company obtained a loan of $10,000 at an interest of 12% on July 1st, 2012. The loan was repaid on 31st of December 2012, the year end of FGH company. Now here the interest expense will be 12% of 10,000 into 6 by 12, as they are paying on half yearly basis. How did we get 2,400? What it was I saying in the question? 1,000 for $1,000 they have bought the computers. Total check issued was 3,400. 3,400 minus 1,000 is 2,400. Clear? Okay. So the interest expense was 600, right? So they have written it in debit interest expense. Loan which has to be paid, is 10,000. Which is 10,000. So 10,000 plus 600 is 10,600. So for the cash, we'll go in credit as 10,600. This is how we will make the journal entry. So that is all for today regarding this class. Any doubts? Any questions you can ask? Okay, so that is all for today. Thank you very much. Good night. Take care, all of you. See you tomorrow. Bye bye.